RealAg Live.
Hey, Kara Oostros here with RealAgriculture.com. It is Monday. I know somehow it seems like we're just, I feel like some days it's just like I talk about Fridays and I talk about Mondays because it just, the whole week goes by so quick. But we're happy to have you along for the ride. We are very excited. Today is Monday and we are talking markets. So I'm going to bring in my guest here today. I have Jon Driedger of LeftField Commodity Research. How's it going today?
Yeah, doing well. Thanks, Kara. How are you?
I'm doing great. So we're kind of looking forward here a bit this week. It's kind of a big week in the markets. Looking at some planting perspective numbers coming out in the USDA. Do you want to talk about some of that?
Yeah, it's the report at the end of March, the acres and also the stocks it always is one of the most significant reports of the year, really out of USDA, maybe the most significant report in some cases. And this year it's probably more widely anticipated than it maybe has been in a long time, and just simply a reflection of the fact that. As we all know, corn markets are extremely tight, soybean markets are extremely tight, and so when in those circumstances, every additional acre and every additional bushel, either higher or lower, has a disproportionately large impact on prices in the market than when stocks are a little more comfortable. And so everyone's looking ahead to see what at least what this initial guess will be for what U.S. farmers are intending, and waiting in great anticipation, I guess. So that's it's a biggie. Yep.
And as an analyst, what sorts of things are you expecting?
Well, I think we're going to see the expectation is pretty widely expected. We'll see a big increase in soybeans and corn, and so the idea is that we'll probably see about 90 million acres of soybeans. That's seems to be the general consensus, and corn acres maybe in the 92 to 94-ish, maybe more million range. And so increases in both of those pretty substantial. No surprise, certainly the market is creating the incentive for farmers to plant more of those crops, but that's kind of the consensus coming in. And so I think those will at least be how we say it. These reports are significant, not just for the numbers themselves, but also in terms of how does that align with expectations. And so as we think about what the market is kind of anticipating going in, that's how prices will respond to what the actual number is. And so that's kind of what the consensus is here coming into the numbers here on Wednesday.
And how responsive do you expect these markets to be to some of these acres numbers?
Yeah, you know what I think. Well, I guess the short answer is highly responsive, but ultimately, I mean, who knows? I mean, maybe they ultimately come in kind of right in line with what people are thinking, and maybe it ends up not being that big a deal, and that can sometimes happen too. It really is kind of when you have a number that comes out that maybe is materially different when you can get a sizable price move, and again the kind of the build up leading in is kind of what also sort of sets the stage for potentially a large price move. So that'll really be a big part of it. And the other thing as well, and it's sometimes easy to overlook because there is such a focus on acres, but they also release March 1st stocks as well for these crops. And so as much as in the longer term, certainly the acres is the more important number. The fact that these markets are so tight, if for some reason maybe stocks are a little tighter, old crop stocks than what people are expecting, or conversely, if there's more old crop supply there, that the market will be very sensitive to that as well. So it really is, not just the acres, not just the fact that the markets are tight coming in, but we do get a lot of important information kind of dumped at the same time. So there's a lot to digest in kind of at once, and so all that is kind of what really builds itself up to potentially a big report. Again, if the numbers come in large in line with expectations, you might look at it and say, "Oh, what was the big deal?" But the setup is there anyway to potentially have a sizable price move if we get some numbers out of line with what people are thinking.
And looking at some of these numbers, what are some of the expectations for carryover right now?
Yeah, so at this point, I mean, the USDA, I think their last report was kind of around 1.5 million bushels for carryout. And so one of the things that for this particular report, we won't get a carryout number in this report. That'll get worked into their next monthly update, which will be in a couple of weeks, kind of April 10th. I forget the exact date, maybe 12th. So this will kind of, I guess, foreshadow what we can expect in that coming report, but we won't get an actual carryout number in this report. But even so, it's right now we have about a 1.5 million estimate out of USDA on the carryout, and I think people are thinking that's probably should be tighter than that. With soybeans, it's about 120 million bushels, just extremely tight. And again, some idea that maybe that number should be coming down a little bit as well. All the stocks figures will have something to say about that, but it's in both cases the tightest carryout in years. We know how strong that demand pull has been in export markets with export sales, corn and soybeans and so forth. And so, all of that is is shaping up for people just looking ahead here to Wednesday. And maybe the other thing as well with something like corn, for example, and this is where the stocks number is important, is and a similar thing up here in Western Canada is it sort of allows you to sort of back into maybe some expectations about what livestock feeding has been. It's a little different than what the crush plant, what they're using, or exports. You can kind of count boats going out. But that on-farm feeding number is something, and again, it's a number you back into, but it's really hard to get an estimate of that until you sort of go get these quarterly stocks updates. And so it's in the case of something like corn, or up here in Canada, feed barley and so forth, that's where these stocks figures can be important as well. So there's kind of the numbers and then all the stuff that backs out of it, and that's that's again why this one in March here is pretty significant.
Absolutely. And we wouldn't be in the ag industry if we wouldn't talk weather. We all love talking weather, which leads into Lindsay's question here. She says, big acre numbers for corn and soy for the U.S. When do we worry about the drought conditions there? How bad is it right now?
Yeah, well, again, the fact that the markets are as tight as they are really sets. I mean, you say, oh, weather matters, and it's such a throwaway comment because it always matters. Of course, it's almost a bit of a cliche, but the fact that again the situation is so tight coming into the crop year, not just U.S., but of course a lot of our crops up here in Canada as well, is kind of what puts an even greater focus on weather. And so I think you could probably say that there's some early season maybe caution through, let's call it the Corn Belt per se, or sort of the Midwest. Far too early to be concerned about it. And I think we all know that a few good timely rains can make us forget about a lot of that stuff pretty quick. Flip side of that is that if they suddenly maybe don't show up, then everyone's a little more sensitive, and markets get a little bit more excited about that. So I would say definitely on the on the alert, partially because of that tightness. Nothing too alarming yet. Probably a bigger problem as you get a little bit further north, and that's kind of into Western Canada, maybe the northern plains, and that's not the heart of your corn and soybean belt per se, but certainly significant, and that's where I think the dryness concerns are a lot greater as you move a little bit further north.
So when we're looking at the prospective planting numbers coming out, what sort of impacts could this have Canadian? Of course, we're looking at the U.S. but it always has, and we have corn and soybeans here. But what sorts of things could this do for canola numbers?
Yeah, well, and that's right, Kara. I mean, it's these. We don't grow that much corn and soybeans in Western Canada, but obviously this impacts all of our markets because of how influential those crops are. And so I think a couple of things. One, so for example, something like spring wheat will be interesting to watch because we expect we'll probably see a lower spring wheat number in the U.S. Wheat certainly has not been buying acres the way corn and soybeans have, and we'll see probably smaller spring wheat up here in Western Canada. And so it may be significant for wheat, and maybe less so from a broader wheat complex per se, but maybe the relative price of spring wheat compared to some other classes. So that's something that we'll watch. But then kind of more directly to the question in terms of canola, it'll be probably the longer term. I don't think it's going to impact old crop canola that much, aside from a bit of spillover sentiment. But certainly, to the extent that canola and soybeans are somewhat substitutes, there will be some impact potentially on new crop canola as well. Probably more so maybe in the shorter term from a bit of a noise and reactionary standpoint. I'm not sure it's going to have as large an impact longer term because canola does have kind of its own story unfolding as well. But yeah, for sure, the spillover impact, especially if it's a surprising report, bearish or bullish, we'll feel that up here in our markets as well, no doubt.
Now, I mean, of course, like you said, canola has its own story going on right now. You're kind of looking at old crop, new crop. There's like $100 a ton spread right now, and that's huge. And we're like, will this meet somewhere in the middle? What's your kind of take on that?
Yeah, no, that's it's really been fascinating, and the spread is even wider if you look at cash prices because basis levels maybe a little softer and for new crop, and some real strong basis levels, say for spring delivery against the July, so the cash spread is even larger. And so yeah, I mean, theoretically, you would sort of suggest that those prices should kind of converge at some point. I guess it's a little unpredictable and hard to say how that's going to play out on the future side. And part of the reason I guess I say that is I do think for canola futures specifically in this current crop year, I do think we're going to just see we're going to see a lot of erratic trade, more volatility, probably less liquidity as we go forward because I mean supplies are just simply dwindling at a rapid pace on farm, and so I don't want to use the word less relevant. That's maybe not quite the right way to phrase it, but I think there's just supplies are so tight and so small, and as liquidity dries up, I think that I think it becomes a little more erratic. And so, in let's say a somewhat more normal price environment, you'd expect at least some narrowing of that spread, some type, some convergence of some sort, or at least somewhat of a coming together. A little hard to say that that's going to be the case how it plays out this year. Probably to at least to a certain extent, but I think it's going to be unpredictable and partially again just there's going to be so little canola left that I think it's just going to get really erratic and low liquidity and all those things, and so it's um, I think a little harder maybe to forecast how exactly that July comes off the board, for example, and just kind of the unique circumstances this year. So that's kind of a non-answer in a sense, and I think it's almost a bit of a wild card as again lack of liquidity and so forth will be an issue.
And do you want to expand a bit more on the veg oil market right now and what sorts of things are going on there?
Yeah, incredibly strong veg oil market. In fact, it's really it is one of the things that has helped canola, and even the old crop canola has maybe been looking a little bit toppy, but from a veg oil perspective, incredibly strong veg oil markets. In fact, as a for example, with soybeans, the oil portion as a share of the overall crush at the highest level in in years, and it's not just soybean oil, it's not just canola, it's palm oil, sunflower oil. The entire veg oil complex has just been incredibly tight, and prices have been really robust. And it's just a real contrast to meal prices, which have kind of been grinding lower. Soybean meal has maybe stabilized here a little bit, but it's a real contrast. And again, just a real strong global veg oil pull. I think part of that is also sort of the biofuels component, and that is sort of been drawing on demand as well as some supply issues. And again, we know how tight supplies are of canola. Tight of supplies have also been tight for sunflower oil, for palm oil, really the entire complex. And so it's been just been incredibly strong. And again, soybean oil had a real sharp pullback late last week. It's recovering somewhat now. Are we sort of peaking a little bit? That's possible, but at incredibly high levels. So very strong on the oil side specifically.
Now, on a different note, if we're moving into wheat has not really been an exciting story lately. It's kind of been a flat market. Do you wanna touch on that?
Yeah, it really is. I think there's a couple things that are acting a little bit of a headwind for wheat, and for one, it didn't never had as tight a story either in the U.S. or globally the way corn and soybeans do, for example. And so, not that wheat wasn't tight. I mean, we've had some pretty good prices. It's not that wheat was sort of heavy and burdensome, but it just didn't have that same that same kind of tightness that corn and soybeans did. And so, it always was a little bit of a laggard in that sense. The one thing we have to remember as well with wheat is that kind of its new crop year kind of clicks over sooner as this northern hemisphere winter wheat crop starts coming out of dormancy. And at this stage of the game, whether you look across Europe or the Black Sea region, and even a good chunk of the U.S., not really any major concerns for that wheat crop. So one of the things, not only is that kind of set the stage for at least a good start to the production year. Again, there's a lot that has to play out. Off to a pretty good start. The other thing as well is if you're a buyer or you're an importer, not a lot of incentive to try and sort of buy now into a bit of an inverse in the cash markets, where you got maybe cash markets, the futures market show some carry, but cash markets globally are sort of showing, higher old crop prices relative to new crop. If you're an importer, you're not going to do more than buy kind of hand to mouth at this stage of the games. You wait for this next harvest. And so that causes prices to leak a little bit lower as well. So kind of a combination of things that, just really a wheat market that's just kind of, probably going to grind along. If corn markets are strong, it's a little, there's a limit to how low wheat prices will go, but not a lot of incentive to get too excited about it, at least in the moment. Again, longer term, we'll see, not necessarily that bearish wheat. If we look out, say, 8-10 months or that sort of thing, on the shorter term, we probably have some headwinds.
And what about dryness concerns as we start to head kind of into in North America, our seeding season here? What sorts of dryness concerns do we have with the wheat market? And I mean, especially if you look smaller, you look at something like Durham across the southern prairies, it's really, really dry.
Yeah, it really is, and forecasts are not great, in terms of what the summer maybe looks like. And again, who knows? You get a couple good spring rains, and suddenly it changes. And maybe on the backside of the year, maybe your rainfall totals are light, but they're timely, and we all know how what a difference that can make. But certainly at this stage of the game, it's very much a concern. And so if you think about whether something's like Durham, we think about, say, something like spring wheat, and maybe spring wheat on its own in Western Canada and the northern U.S. won't lift the entire wheat complex that much per se, but maybe it allows for some premiums to build back in for spring wheat relative to some other classes. And just the rest of the crops we grow here in Western Canada, many of which have a pretty tight carryout already coming in. If if things are dry and yields are maybe pressured a little bit because we do get that lack of rain. It's going to keep these balance sheets. Balance sheets probably already looking on the tighter side in a lot of these crops, and it only gets more so if you start shaving some bushels off.
Yeah, absolutely. And it's the time of the year when, you're talking spring wheat, you're talking Durham, but producers are kind of looking at making those last minute changes and they're maybe watching the market closely. What if you were making any last minute changes right now? Do you have any recommendations on what you'd be making?
Well, probably honestly, the one crop that again, canola is gets all its excitement on the old crop because we've talked about the huge inverse and $800 futures. We pull back a little bit now and so forth. It's the one crop that to be honest, even on the new crop futures, so we're trading a little north of $600, between 600 and 625 the last while, which, oh geez, up until 6 months ago, that would have been just a phenomenal price. And now it seems a bit pedestrian when you think about, $800 for old crop. It's hard to get really bearish on new crop canola. We're looking for an increase in acres in Western Canada. We're looking at about 22.5 million acres, which is a bump from last year. I think it's going to be hard to push those acres a whole lot higher. And I mean, we're just going to be so tight this year, but honestly, our S&D looks pretty much almost as tight next year as it does this year. And that's not to say we're going to say, canola is going to trade $800 next year or anything like that. Obviously, the soy complex and everything else is going to have a lot to say about that. But at the same time, it's hard to be too bearish new crop canola. We have some concerns, maybe a little bit more so about old crop, but in terms of new crop, it's hard to be too bearish that based on what we know today. And so, that's a crop that I think still maybe has some decent potential on new crops. So if a person had the ability to try and stick a few more acres in, that's maybe not a bad candidate.
Yep, absolutely. So, moving into some more crops now. This is quite specific to obviously parts of the prairies, but any outlook on canary seed this year?
Oh, well, I think canary seed is probably going to be on the tighter side here again this next year, and I don't think we're looking for maybe a big increase in acres. In fact, maybe a little bit of a bump, not a huge increase. And so it's I think going to be relatively flat. I don't think it's going to be necessarily overly frothy per se. And it is a crop that it seems like you plant a few extra fields and suddenly now you've got a little bit of cushion built in because it is such a small crop and such a small demand base to start with. But we'll see a bit of a bump in acres. Maybe that helps cushion the add a little bit of cushion to the supply. Probably not as maybe as rambunctious as some others, but a little bump in plantings maybe that helps out a little production around the margins, takes a little bit of the edge off potentially.
And I know this is you also work with Chuck Penner, he's your partner in LeftField
Mhm.
commodity research, and he tends to focus on the specialty pulse crops. But do you have any comments on specialty crops right now? You know, is there any dark horses kind of coming through when it comes to those crops?
Yeah, like I think as we look across the complex here, I mean, I think the pulse outlook still looks pretty, pretty good overall. And again, yields will have a big portion of it. One of the things, and for example, something like yellow peas, we're so dependent on China, and that can be your best friend when it's going well. Of course, we know that there's also sometimes some vulnerabilities there as well. One of the things that's really also helped yellow peas has been the fact that meal prices had been strong and those have been easing off. So there might be an element of a function of how tight the soy and meal complex is that backs a little bit in yellow peas. One thing that might be a little bit interesting potentially is something like green peas, and it's just simply one where because it has been lagging, it's almost a bit of a contrarian play, perhaps, where maybe we lose some acres in green peas, and that maybe tightens that market up a little bit. Also, potentially something like the green lentils is one that potentially maybe doesn't get as many acres in as it needs. So, no, there's some things we'll be watching here as we go forward. Again, weather and yields, all that stuff will have a big part to play in that. But in some of the pulses, those are some things we're keeping our eyes on here anyway. And so again, we talked about dryness and through some of those real key areas. I mean, that's some of those key pulse and special crop growing areas, and so that's going to have a big role to play, obviously, in this as well. And again, it's a bit of a throwaway line because it's kind of every year you say that, but this year in particular, it seems like it's in particular focus.
And for anyone that maybe just tuned in halfway through, like we did talk a bit about weather at the beginning, but do you really want to expand a bit more on this year, why it is so specifically important?
Yeah, it's kind of as we mentioned at the outset. It's in those years when the supplies and stocks are just so tight as they are this year, and across most major crops, it's not just corn is tight, but beans have cushion or whatever the case is. It's kind of really across the board that everything is extremely tight. And so every time, when stocks are tight, it's kind of like each marginal bushel that you either add to the balance sheet or you remove from it kind of has a relatively larger impact on prices than maybe when there's a little bit more cushion in the supply. And so, in that sense, that's because it is so tight. It's really, again, obviously, it's the case every year where weather impacts markets, but the fact that there's just no cushion to fall back on, that the markets and a lot of these crops need every acre and need every bushel that we can get on every acre. That's really what kind of magnifies kind of the weather focus this year, on top of the fact that, particularly in Western Canada, but, also, for maybe the US in general, is just, kind of watching that dryness and already maybe starting a little bit on the dry side. It's not like we're starting off in great shape, but we're a little concerned about what it looks like further out. It's kind of like we're already dry coming in and potentially dry going forward. So it's kind of a combination of those factors that is really really maybe increases the intensity that we're watching the forecasts at this year, and yeah, magnified more so than it already always is during the growing season. But this year in particular, it's really is important.
And as Lara's kind of noting here, she says that phrase, knowing your numbers will be just that much more important this year. So, absolutely, I think you'd agree on that one.
Yeah, no, absolutely. It really, yeah, kind of always goes without saying, but again, the price volatility and even on the individual farm, various dynamics between your crops, your yields, all the risk management programs you have in place, all that sort of thing. Yeah, it just gets amplified right during a time like this. So I yeah, wholeheartedly endorse that comment for sure.
And Gerard's got a question here. He says, "How's a North African durum crop doing?" Of course, he farms in the Palliser Triangle, so we're very focused on Durham, and it's dry. Do you have any comments on that?
Yeah, you know what? It's been a bit mixed, I think, in terms of North Africa. So, I mean, I think it's something we're definitely going to be watching here going forward. And so yeah, we'll keep an eye on it here for sure. But generally, a bit mixed is kind of the sense that we're getting. So, don't know how dramatic an impact that's going to have in terms of what they're purchasing expectations will be or how that exactly backs in or backs out for the coming year, but something we're definitely keeping an eye on for sure. We are looking for a bit of a bump in Durham acres, and it is a market that maybe on the new crop side has been a little more, I don't know, lackluster is the right way to phrase it. New crop contracts are still maybe not bad, but have eased back a little bit. It's not certainly not buying in acres around the margins here as we get closer to planting. So we're, again, yield obviously is a big part of that story. We're not really bearish Durham. We're kind of, let's call it maybe a bit neutral at some of these values, but a lot of that obviously is a function of how things are going to play out here going forward. So.
Now, Lara's got a question here. She says, which crops do you think will be rambunctious? I mean, of course, we're watching all crops and we're watching all futures, but is there any, I guess they wouldn't call it a surprise if it wasn't a surprise, but is there
Yeah,
any
yeah.
kind of expectations?
Yeah, when everyone picks the same dark horse, it's not a dark horse anymore, right? So,
Yeah.
yeah, probably again, I know we've sort of beat this horse to death a little bit, but canola, I guess, is the one because it is so tight. And part of the thing about canola is the fact that like the European crop is already planted, the Ukrainian crop is like those acres are already in the ground, right? So it's not like we're going to be able to suddenly get a whole bunch of acres in. I think the ability for Western Canada to plant a whole lot more acres, I think, is a bit limited just out of rotational considerations. And so really there is that the need for that Canadian crop is just amplified even more so than it normally is. And so if there are any weather concerns, I mean, that is the one that really has some potential. Now, again, soybeans and some of those other crops will be a factor that play into it also. But that's something to really watch. The other one as well, and I wonder a little bit again, the wheat complex on its own is maybe not that bullish the way it looks today. But I do think that there's maybe some room for spring wheat to increase some relative value compared to, say, winter wheat and some of those other ones. And again, we're going to see lower acres in Western Canada. We're going to see lower acres in the northern U.S. You compound that with maybe some loss of yield if we're a little on the dry side, and maybe you got some space for for spring wheat to increase on a relative value basis compared to the rest of the wheat complex. And so that's that's something that maybe keep a bit of an eye on as well here too going forward. So.
Absolutely. And I mean, we can't forget about the one crop we haven't talked about yet, flax. What's the flax market doing right now?
Yeah, we're a little cautious about flax. I mean, it's again incredibly strong old crop prices, and that's helped pull new crop up. But I guess we feel a little more cautious about what flax is going to look like going forward here. We're going to plant a little more flax. We expect in Western Canada. Uh, it's always hard to get great information out of the Black Sea region in terms of what their crops and acres and so forth will be, but indications are that their crop is, they've planted more flax and they'll have a bigger flax crop. And so, it is one that we're probably maybe a little cautious about what this flax outlook is going to be going forward here. So, again, everything is so tight. So, whether I've said it over and over again, but it's true. But it is one that's maybe would view as being a little bit more vulnerable. Maybe one where a little bit of cushion is able to get built back in, and not just because of more plantings here in Western Canada, but also maybe some of that competition from from a Black Sea crop, where maybe if their acres are up and their yields are up a little bit, now you start getting now you have a little more competition globally into a market that already is not a huge market. So it's maybe one that's a little easier to to kind of fill in. So a little cautious about the flax based on what we see today.
Yeah. And before we go, we got one more question here from Sean. He says, are you still bullish on exports to China from North America through all of 2021?
Oh man, that's actually a really good question. Um, that's a really good question, and it's almost a conversation on its own. And there's probably two parts, I guess. So as we've gone along through this past year, there's been an element of where there's no doubt that they've needed the grain. I mean, I think they had a bit of a smaller crop last year, and so that's part of where that pull is for wheat and maybe corn in particular. They've been rebuilding some of their herds from ASF, and so there's some demand pull there as well. Also, maybe a little element of some stock building and a little bit of maybe a bit of a defensive type of a demand, if you will. To the extent that that maybe there's a portion of that where some demand has been pulled forward, I wonder if that maybe eases some of the intensity of the buying, if you will. So I wouldn't say that I'm bullish on China exports, and that's not to say that they're not going to be a big buyer and that they're not going to have a big footprint. Obviously, that's the case. I just am a little guarded about, this part of this run up over this last number of months has been sort of a big part of that story has been on the back of Chinese buying, and they've been buying soybeans and they've been buying corn and they've been buying wheat and been buying barley and everything else, peas and so forth. Well, I wonder if that plateaus a little bit, and to a certain extent, where obviously there'll be a big buyer, they're a hugely important market, but is there a certain point where maybe that demand growth, that pace of that growth starts to taper off a little bit? Does that take a little of the edge off? I'm not sure that that's the case, but it's something I'm a little watchful for and we're a little wary of. And of course, with all things China, I mean, there's a political component and they're unpredictable, but a little careful about that anyway. I don't, maybe we would phrase it that we don't want to be complacent about the assumption that China demand growth is just going to continue to forge ahead unabated. That might be a little on the reckless side if that's your base assumption. So that's maybe how we'd view it. I know, uh, yeah, a little guarded about the pace of demand growth. Maybe that's the safest way to phrase it without saying that I'm bearish on exports per se.
Yeah, and Sean, of course, has a follow-up question. We're capping him at a follow-up. Do you think the biggest variable on the intensity of the China buying depends on the ASF situation and how it develops in 2021, at least on the soybean side?
Yeah, I think that's got to be a big part of it. And I mean, for example, soy meal prices in China have been trending lower, and at the same time that their crush is sort of stalled out. And again, a few weeks, you're not going to read too much into that, but it does make you wonder a little bit that if their crush is down and their stocks are down and their price is declining a little bit, what is that hinting at? Again, you don't want to read too much in a few weeks of price behavior, but I do think that the markets prices are determined around the margins, and if around the margins they're buying a little less, maybe their demand is down a little bit, whether it's ASF driven or some other reason, that's maybe enough to take a little bit of the steam out. Again, if we don't get the acres, we don't get the yield in the US, well, maybe that more than offsets that. But you could see a scenario where maybe the acres get in, the yields are pretty decent. Maybe that Chinese buying isn't quite as big as people are assuming if they're just going to extrapolate rapid demand growth. That might be the scenario where you let a little air out of some possibilities. So it would help if we had reliable information about what was going on in China with ASF, and so I think that's definitely a lot of uncertainty around there. So we'll try and look for some hints and some other indicators, but definitely something that will be a big part of the story here going forward for sure as well.
Absolutely. Okay, is there anything else you'd like to add, kind of heading into Wednesday's report and what we might be looking out for this week?
No, I think we covered it pretty well. I mean, it's a huge report. I think one of the things funds are kind of on the long side here with corn and soybeans coming into the report. Some of the wheat contracts as well, and so it maybe makes you a little potentially vulnerable to the downside if it is a bit of a bearish report. Stocks are too tight to allow the markets to come unglued too much. And again, there is that dryness concern going forward. But kind of what we see on Wednesday probably is going to set the tone until planters really get going and people can start assessing crop conditions and that sort of thing. So kind of whatever we get on Wednesday is probably going to set the temperature here for at least the next few weeks, and then we'll just start worrying about weather and crop conditions and those sorts of things, and go from there.
Absolutely. And if producers want to follow you, I know you're active on Twitter, things like that. Where can they get a hold of you?
Yeah, LeftField CR is our website, and you can follow us on Twitter. Check out our website. We offer free trial for a newsletter. All our contact info is on there: phone numbers, emails, everything. Love to chat with folks, and if anybody's got questions about things we chatted about, would love to connect with you. So look us up.
Okay, awesome. Thank you very much, John.
Yeah, great. Thanks, Kara.
And thanks to everyone who tuned in today. I love seeing your comments, love your interaction. So thank you very much. Tomorrow we will be back here. We have Matt Chappell of Pride Seeds. I will be your host tomorrow. So we'll be talking corn and soybeans in the East. So tune in for that. That'll be a great agronomic conversation. And in the meantime, thanks everyone for getting real and for getting connected.